Hey, my name's James Nicholson and welcome to my YouTube channel. Now, inflation data is dropped in a fairly big way, and it's surprising just how much it has dropped by. So we're going to go into that in detail today, what that means for house prices, what that means for interest rates, and what will happen going forward. So make sure you stick around and watch till the end. Now, if you haven't done already, please subscribe to the channel and hit the bell notification. We've just hit 6,000 subscribers. We're on the way to 10,000. That's our goal for this year. So hopefully we can hit that. And we're getting 75,000 people watching us every single month now, which is growing on a daily basis. So if you haven't done already, subscribe and hit the bell. And while you're here as well, smash the like button, guys. Just quickly smash that like button there. That really helps us with the YouTube algorithm. Every one of you that smashed the like button has helped us get those 75,000 people. So do that now and help us out. So inflation. It's not often that things end up better, particularly in the last couple of years. It's not often that things actually are better than forecast. So last month's inflation data was 8.7%, right? That was for May, because we talk about data that's happened in the past. And April's data was 8.7. It didn't move at all. Now, analysts were expecting that we would drop today to 8.2%, but we didn't. We got a much better result than we were expecting, and we're now at 7.9%. Now, I can hear you guys saying 7.9%, that's crazy high. It means prices are still going up, doesn't it? But less quickly. So you've got to look at it in a positive note, and I've got some reasons for that, particularly your interest rates that you're going to pay. This is going to make a big difference to where they are likely to end up now. So this is good news. Now, it's not 2%, but we can't go from 8% to 2% overnight. We've got to go through the process, and things are looking better, which is all that we can hope for at the moment. So what's going on? Why have we got this big drop? Well, petrol has been a big one, they're saying. Petrol has dropped significantly. I don't even drive a petrol car, I drive a Tesla, but I've driven past the garages and I notice it now in my area. Some of them are like 130 something. And I recall at one stage we were saying, are we going to hit £2 a litre? So that's a big drop that we've had there. And that's going to carry on, hopefully, and really help move us out of this inflation. Now, one other thing that's positive that won't hit these figures right now, but the pound has actually got stronger, significantly stronger from when Liz Truss was in power, when it was nearly $1 to £1. You can get $1.31 to a pound. That changes all the time, but it's a lot stronger than it was. And that means when we're buying stuff into the country, it's going to be cheaper, right? That's good. And that means that we will have a little bit of future improvement. Energy is coming down as well still. So there's lots of future predictions that it's looking better. It could be better. The government could surely be doing more to make sure that we're not getting a difficult scenario, but it is what it is. So this data is telling us that we're now similar inflation to March 22. Right, and that's probably when you started thinking about inflation. Before then, no one really cared. It was something that happened in the 70s. But March last year, people started thinking about it. I know if you were a builder, you probably thought about it before then. I remember in 2021, when we were doing some renovation projects, the builders were all talking about the cost of timber. The cost of plaster was significant. But Joe Public, buying their food in Sainsbury's or Tesco's, they weren't really bothered by that kind of stuff. They're not constantly doing building projects. So what else is going on? Well, food is still a problem. So food inflation is at 18.4% annually. That's crazy. Now, where does this impact you as a property investor? Well, look, if you're a property investor, that means that your tenants are massively impacted. Food, especially for poorer people, is a big chunk of their weekly outgoings. And so this is really hitting people that are already on the poverty line really, really hard. The energy costs that went up, the food costs that we've had, and rents increasing, and all of these things are definitely hitting everybody. But if you're at the lower end, a bigger percentage of your income goes towards your food. If you earn 100 grand a month, then you probably wouldn't even care about a carrot going up by 18%. But if you're on the dole or on a lower income and you've got debts and stuff like that, you're really going to notice this stuff. So food is really tough at the moment. Now, other countries, how are they doing? Well, US has only got 3% inflation now, which is great. And the Eurozone, on average, is 5.5%. So we're still far behind on these areas, which is something we've got to fix, right? We've got to get this stuff moving forward. We've got to get this inflation down and stop talking about it and move on and crack on with our lives. I'm hoping that the last few years has been really difficult for everybody. We've had a pandemic, then we've got inflation, we've got a cost of living crisis, we've got a war. Like, all of this stuff is not great. Let's really hope that 2024 is going to be a good year and just a nice growth year. Would be good, wouldn't it? So what else is going on? Yes, what's this? So interest rates. Sorry, my notes are tiny. Interest rates. This is the good news, right? So what they're saying is that in August, which is the next Bank of England meeting, we think the interest rates will go from 5%, which they're currently at, to 5.25%, which is way better. We were looking at 5.5%. It was all dependent on this inflation data. This inflation data is better. So this is a good result for you. It could have been better if the inflation had dropped to 5%. Yes, we probably wouldn't have another interest rate rise, but it's unlikely that that's going to happen, that it's going to absolutely go from 8.7 down to 5 in 1 month. It takes time to ebb down that little bit at a time. So the fact that we're saying that the interest rate rises are going to be less is good. And there are some analysts out there now saying that we will peak at 5.5%. Now that is the better news for me. So that means that we might have 2.25% rises. And there's not just one place saying that. The market is pricing that sort of stuff in as well. And so that's good. It's not great that they're going to go up again, but it is definitely good that this seems like we've had some change. We've had some sort of shift here. And if that can carry on a month-by-month basis, which they're now saying is good, not the Bank of England are saying this, but analysts are saying that it does look like for the next few months, the inflation will continue to drop because of lower energy, because of lower fuel costs, all of these things. And food as well is looking like it's peaked now as well. So food isn't going up as much. It did go up marginally in June, but it's not going up at the rate it was. So if that's peaked, that's really good news for everybody involved. So this inflation report, you've got to have the glass half full, not be a glass half empty type of person, and look at it and say, this is good, right? This is better than we were expecting. We were expecting 8.2% inflation. We've got 7.9. I'll take that all day long. Do we want 5%? Yes, we do. The fact that it's now less likely that we're going to get another 0.5 percentage base point rise in the interest rates, that's good as well. That's definitely going to help people for the longer term. It means their mortgage rates are not going to hit them as bad as it potentially could. And what you'll see from lenders, I'm going to do another video soon on this, what you'll see from lenders is once they get some more predictability. So once the lenders know, they say, okay, look, it looks like interest rates are peaking out here, and they'll get a little nod from the Bank of England to say, yeah, you're right, this is pretty much the top of where we're expecting to go unless something catastrophic happens. Then you'll start seeing some more competitive deals come into the market. If we get crazy inflation carrying on, rates that are unpredictable, banks just will whack their rates up way higher than the base rate and cause major problems when you're looking to refinance. We saw that with the mini budget and various other times through time. Or we could get a 2008 problem where they stop lending. That is probably the worst thing that could happen. If you finish your deal, the banks stop lending and you can't get onto a new deal and you go on the variable rate, that is the worst case scenario that could possibly happen. So we want to get a bit more predictability. This is getting us closer to that. And I think this is all around a better than expected report, not great. So let me know in the comments what you think about this. Do like the video, subscribe to the channel, and look, property investing is a great way to protect yourself against inflation. Why don't you learn how to use strategies like the buy, refurbish, refinance, serviced accommodation, and all these different strategies by joining the Property Accelerator. You can do it for £1. I'm going to pin a link below, and that is a trial of the Property Accelerator for 7 days. Nothing to lose except for £1. So click on that now, check it out, and come and join us, and let's mentor you to growing your property portfolio. Go and check out all the other content on my channel, including this one right here.